3-minute trader tip, trading Bollinger Bands, the basic principles. In this short video, we're going to look at Bollinger Bands, which use 3 lines, the middle line being the 20 EMA and the upper and lower lines, 2 standard deviations from that middle line. A widening of the band suggests increased volatility and a greater movement in price, and of course vice versa. Often a move outside the top or the bottom line may indicate an overbought or oversold situation, and is the most common used application of Bollinger Bands for entry. Sometimes it may also be used in combination with increasing volume to suggest a movement out of a period of congestion. Let's look at the Bollinger Bands on AMC Amcor on the ASX, and you can see the middle line, as we said, is the 20 EMA, and we've got 2 standard deviations away from that middle line depending on how much that's moving at any one stage and how price is. And you can see during periods when there was significant price move, you can see the bands widened on that increased volatility, and likewise what we're seeing now in times of relative congestion, we're seeing the bands relatively close together. So what we sometimes see, and we see this here, is if it moves outside the bands, there may be a period of retracement. Here we've got a movement beyond the bottom line, and we get that retracement up to the middle line. So this is how some people would trade this. Alternatively, as we suggested, if we see the bands widen after a period of congestion, which we had here between November and February, if we see the bands widening, then that's an added tick to say that this is now breaking out of congestion. It isn't just restricted, of course, to daily charts on shares or share CFDs, but also can be utilized on other asset classes. For example, if we look at the GB pound yen on this hourly chart, again you can see during periods of congestion the bands are close together. As we get some price movement that's significant, we get the bands moving apart until volatility subsides again and we get them moving closer together again. But you can see again here, if we traded this above the band, once it was coming back down, we could have made some nice money here, and likewise moved up top of the band here and moving down to this point. It would have failed on this point, but of course that's why we have risk management stops in place. But again, we would have done pretty well out of this move here to the upside. So that's Bollinger Bands in a nutshell. Have a look, put them on some charts, and as with all indicators, it requires testing before trading, and you look to increase the probability of these trades moving with you by looking at what other indicators you can add alongside. Trade safe, and we'll see you again soon. Bye bye for now.